Hi, I'm DK Will, and this is DK. We'll talk about it.
Check the mic and make sure it sound right.
Well, I thank you for clicking on my video, and this video is hopefully designed to add to the helpful principled information that I try to provide here. Keeping in mind, as like it says here, I am not a financial advisor, I am not a lawyer, I'm not a counselor, not by profession, and I'm not a religious leader. Although I did have a title, counselor. Interesting. But nonetheless, this video is going to talk about what the mind thinks is a complicated topic, but I want to show you that it's not a complicated topic. And the focus of my videos are always designed to help my listeners. You know, I give you information like the dollar is dying. That's not just so you know, oh wow, isn't that interesting? The dollar's dying. No, it's because I want you to know that situations are developing where you might want to consider what can you do. Like the symposium I did a while back, where is safety? What can you do to protect yourself from the developments that are happening globally in the monetary system? And then I got the one about gold bugging out and the turn to gold, because see, the dollar is getting ditched and dying. And the BRICS nations are creating an entirely new monetary system of sound money. And so I'm going to show how developments that sound bad are actually right in line with the information and the counsel, I'll say, that I've been giving on my videos. And I hope you like, and I hope you subscribe. And that's my dog. She's fighting herself. And I'm going to go over right here and talk about how China has been selling their U.S. Treasury bonds and buying gold to create a diverse net worth of their holdings in gold. It has allowed them to decouple the economy from the dollar. And they're going to begin a treasury bond market of their own. So they see the need to go to gold and to go to treasury. Exactly what I'm recommending. Now, China's considered the opposite, the opposition. That's the way they give the narrative. But China's not alone. But here's what's important about this development as we'll go on. It is important for us to watch these new trends, as they will create new valuations upon currencies that have been lying dormant for many years. These new local currencies being traded between nations going forward will soon be operating from their own strength and support through gold. And that's been the whole point of what I've been saying. It goes on down here to talk about the tokenization of U.S. Treasury market. And it won't just be the U.S. Treasury market, because remember, China's going to create a Treasury market of their own. And without making it complicated, it says here, because these tokens have gold within their net worth, it will turn our fiat system into a real-world asset backed by gold, utilizing a digital protocol that standardizes each transaction made around the world. So in other words, if you like China's bonds, you can go there. But when I did the video over here, I said I wanted to show you, follow the roadmap to the Treasury. We'll get an excerpt from that later. But we're going to start over here, where it says that China has been selling their U.S. Treasury bonds to create their own holdings in gold, to decouple their economy from the dollar and begin the Treasury market of their own. Because China's not alone. China's considered the opposition. But what about Japan? Japan is dumping $63 billion in U.S. bonds. The story reads here that Norinchokin Bank, which is also a topic that I learned from News, Rumors, and Opinions, where I got this name here, and I was able to search up an article about it. They're going to sell $63 billion in U.S. and European sovereign bonds to mitigate losses from adverse interest rate bets. This bond sale, representing nearly a sixth of the bank's global portfolio, is scheduled to be completed by the end of March. This article was written June 19, 2024. So within 9 months, and enough time to have a baby. The bank anticipates reporting a net loss for the fiscal year, tripling its previous estimate of loss, which looks like 1.5 million yen is what they use, I presume. But the point is they're willing to make this move at a loss. So that must be to stave off other losses. That will play into this conversation that I'm going into, this seemingly complicated topic, to show how simple it is. It says it's a strategic shift in portfolio overhaul by Treasury Bank. And that's what I want you to consider, friend. I want you to consider a potential overhaul of your own. And when these currencies do begin to do what it said here, begin to find their own values in a real asset world. Where did we read that? We read it somewhere. Here, new valuations, okay? When you have that money, we're back to the question, what are you going to do with it? What are you going to do with it? Put it back in a dying fiat dollar if the change hasn't been made? You see, the dollar will have to be worth less for you to get a lot of dollars for your foreign currency. And so this move towards gold, good idea. This move towards blockchain and cryptos that will last, good idea. This move towards treasury securities, good idea. Why is it a good idea? Let me try to answer that by referring you to this INVESTOPEDIA article about the 10-year treasury bond yield as an example, what it is and why it matters. And the rates indicate the confidence of investors in the economy. Okay? So, the 10-year bond yield is the interest rate the U.S. government pays to borrow money for a decade. Yes, you can loan money to the government instead of letting the government loan money to you through its fiat banking system. It serves as a benchmark for interest rates and a key indicator of investor sentiment about economic conditions. It matters because it influences borrowing costs. You won't be worrying about those borrowing costs on the borrower side. You'll be worrying about those borrowing costs on the lender side because you will be lending to the government. Okay, keep following me. It impacts the valuation of financial assets and signals expectations about inflation and economic growth. Well, we know what our expectations are with the dollar. But here's the point I'm making. If China is dumping the U.S. Treasury bonds, and Japan is dumping the U.S. Treasury bonds, and we know Russia is dumping the U.S. Treasury bonds, we'll just call them Treasury securities, because it's not just the bonds. There's bonds, there's notes, there's bills. If they're dumping them, a economic factor comes into play. Right here. The bond tends to signal investor confidence. The U.S. Treasury sells bonds via auction, and yields are set through a bidding process. Prices for the 10-year bond drop when confidence is high, which causes yields to rise. In other words, you pay less and you get more. Thus, this is because investors feel they can find higher returning investments elsewhere and do not feel they need to play it safe. Well, where is safety? Isn't that what we said? I'm sorry, I had to take a little break there. My phone rang. I had to cut a little bit out, and I'm going to start over. I'm trying to pick up where I left off. I covered what happens when confidence is high. Continuing here, it says, when confidence is low, bond prices rise and yields fall, as there's more demand for this safe investment. Put simply, falling yields indicate caution in the markets. This confidence factor is also felt outside the U.S. as it points to the future of the global economy. The geopolitical situations of other countries can affect U.S. government bond prices, as the U.S. is seen as a safe haven for capital. This can push up prices of U.S. government bonds as demand increases, thus lowering the yields. In other words, you pay more for the bond because the bond has a value on it. It could say, let's say it's $1,000 bond, but you can get it for $993. I mean, that's just a poor example, but you can see there that's $7 built in. Well, for 10-year bonds, it's going to be a lot cheaper than $993, but you get the point. Your yield is better. But when the confidence is high, the bond prices go down because they're not as attractive anymore. So now that same $1,000 bond, you might be able to get it for $850. You see? And that's what that's trying to say there. So now that being said, what do you think this type of activity, dumping $63 billion in U.S. bonds, what do you think this type of activity, selling their U.S. Treasury bonds, what do you think this activity of Russia getting rid of their bonds, China getting rid of their bonds, Japan getting rid of their bonds? I showed you, can you see what Kenya sees? The BRICS nations unloading their bonds, and not just unloading their bonds, but also unloading their use of the dollar in international trade. Can you see how that impacts the Treasury bond, we'll say Treasury securities prices? So when I was whispering to your paradigm with following the roadmap to the Treasury, I was trying to help you see that you can become a lender to the United States government with the monies that you are anticipating through crypto explosions, through the revaluations of currencies, which is absolutely happening as we speak. And so with the Treasury bond demand decreasing, that means the price is going to go down and the yields are going to go up. Because don't think for 1 minute that the United States is going to stay on the bottom of demand. No, the United States is infiltrating the entire monetary system with the XRPL, with Ripple, with them being the mechanism behind all of this. And then when the U.S. gets back on board and they get their gold leaves, having the most gold too, that's a boom. And then all of a sudden there's this new increase in demand, and probably Trump will bring it in, gold bug Trump. This new increase in demand for the U.S. Treasury securities. But here's the point, folks. Because you are listening to DK Will, you'll already be there. And you will benefit from that explosion because you would have gotten them on the very cheap. And did you know you could trade them? Just like you trade anything else? You don't have to keep them for 10 years. You can sell them. Buy low and sell high. I mentioned I'd show you an excerpt. Let's go look at that excerpt from this video done 5 months ago on how you can become a lender to the government instead of being a borrower to the fiat fake monopoly money system. I said, blockchain is the wave of the future, ride the wave. I highlighted gold, precious metals, real estate is the way to go, and I made it a point to say that government securities was another place where I was going to spend my money, because like this one says, here's your money, so now spend it how we tell you. We don't want that to happen to us. We want to find safe places to put our funds and to have the least impact on us from a tax perspective. So aside from maybe looking for money managers with the SIPC insurance instead of the FDIC insurance, aside from looking at real estate and trying to invest in real estate because they're not going to make more Earth, even if they do make it to Mars, there's another place that you might want to concern yourself with, and that's government securities. And you can do that right here at Treasury Direct. You literally can create an account at Treasury Direct, and you can, without the middleman, purchase government securities, savings bonds, Treasury marketable securities, and you can see here we offer electronic sales and auctions of other U.S.-backed investments to the general public, financial professionals, and state and local governments. Yes, as the general public, you don't need Bank of America, U.S. Bank, Schwab, or anybody to use your Treasury securities for you. You can buy them yourself. So when we see China fulfilling their de-dollarization efforts and dumping U.S. Treasury securities, and when we see Russia dumping U.S. Treasury securities, and when we see Japan dumping U.S. Treasury securities, we know that the demand for those securities is going down. But now we have learned, hopefully, that that's a buying opportunity for those of us who want to invest in U.S. Treasury securities. So unless you think the United States is going to become defunct as the world power, then you probably should consider the direction given on following the roadmap to the U.S. Treasury 5 months ago. And the Bible says that this is the last world power, so I don't see anyone replacing the United States as the world power. But I do see opportunity that the introduction of gold-backed currencies, and as well as the introduction of gold-backed tokenized securities, as being an investment opportunity where you get the opportunity to buy low and to sell high, and you get to have tax deductions available to you because tax on Treasury securities does not come in at the state level. There is no tax at the state level. So if you're in a state that has taxes, you can have an untaxed income when you have Treasury securities. So it sounds complicated. It's not. It sounds bad, and it is, but it's also not bad if you know how to adjust. If you can shift your paradigm and say, I probably ought to do something else because banks are failing, they're locking up banks, and all kinds of crazy stuff is going on. Here's another item you might want to consider, folks. You might want to follow that roadmap to Treasury securities. I'm DK Will. This is DK Will Talk About It. And guess what? I talked about it. Have a wonderful day.
Check the mic and make sure it sound right.